There is a point in your financial life when money stops being just a number on a screen. It starts changing the way people respond to you. Banks stop treating you like another caller waiting on a customer service line. Financial advisors begin seeing you as someone worth pursuing. And eventually opportunities start showing up in front of you before you even go looking for them. In this video, we are going to talk about 3 net worth levels where people, banks, lenders, advisors, and even your personal circle may begin to treat you differently. And the strange part is, the first change does not always feel dramatic. Sometimes it starts with something as small as a monthly bank fee. Last February, I was looking through my checking account and noticed a $17.50 charge just for keeping the account open. It was labeled as a monthly service charge. So I went into the bank and spoke with someone in person. The banker explained that the fee was standard for that type of account, but because of the assets I already had with that bank, they could waive it as an exception. Then the banker gave me a quiet little nudge. He basically told me to come back in a few months because those fees would be under his discretion and he could waive them without a problem. That is the first signal. It is not about $1,750 changing your life. It is about the message behind it. Once your financial profile reaches a certain level, the institution starts seeing you differently. You are no longer just another account. You become a client they want to keep. And that first level usually begins around $100,000 in net worth. At the 6-figure level of net worth, something begins to shift. Around $100,000, you start building real financial credibility. You may not feel rich. You may not be living a completely different lifestyle. But to banks, credit card companies, lenders, and other institutions, you are no longer seen the same way as someone who only has a few $1,000s to their name. This is where banks begin paying closer attention. Once you have somewhere around $75,000 to $100,000 in assets at a bank, you may notice that the people inside that bank start treating you with more care. Many major banks, such as Wells Fargo, Chase, Citi, and Bank of America, have different service tiers depending on the kind of account you hold and the amount of money or assets connected to that relationship. Some higher-level accounts require minimum balances of $20,000, $50,000, or even $100,000 and above. In exchange for keeping more money with them, the bank starts offering benefits that are not always available to the average customer. That can include waived monthly service fees, more dedicated support, access to wealth managers, and sometimes even lower rates when it comes to mortgage lending or home loans. Now, is saving $20 or $35 a month in service fees going to completely change your life? Probably not. But that is not the real point. The point is what the bank is signaling to you. They are saying, in a quiet but very clear way, that they value you more as a client. Someone with only $5,000 in an account may still be treated as a regular customer. But once you cross into that $100,000 range, you become someone the bank wants to keep, support, and possibly sell more services to in the future. Another institution that may start treating you differently around the $100,000 mark is the credit card company. To be clear, your net worth is not the only factor they care about, but net worth is often connected to income, stability, and creditworthiness. So when your financial profile becomes stronger, you may start receiving pre-approval offers in the mail for credit cards you never even applied for. And these are not always basic cards with tiny limits and simple cashback rewards. You may start seeing offers for premium cards like the Chase Sapphire Preferred, the American Express Gold, or the Capital One Venture X. These cards can offer strong rewards, sometimes around 2 to 4% back in certain categories, along with travel benefits, lounge access, and hotel upgrades. The strange shift is this. When you do not have much money, you usually have to chase these products. But once you fit the profile of a valuable customer, the companies begin chasing you. Car dealerships may also treat you differently. By the time you have built $100,000 in net worth, you probably have a stronger credit profile. You have paid bills on time, kept debt under control, and grown your income. Dealers and lenders like that, instead of disappearing into the back office for 40 minutes trying to make the deal work, they may approve you faster and offer better financing terms. The difference between borrowing $30,000 at 5% instead of 7% can save close to $2,000 in interest over a 5-year loan. Your monthly payment may also be a little lower, but the bigger change is leverage. They know you have options, so they are more willing to work with you. Financial advisors also begin to notice you. Below $100,000, many firms may push you toward automated services, phone-based advice, or robo-advisors. But once you reach that six-figure level, you may unlock more personalized financial advice. That does not always mean it is worth hiring an advisor right away, because the fees may still be high compared with your portfolio size. But the important point is that you are now on their radar. And then there is your personal circle. Friends and family may not know your exact net worth, but they can sense when your financial life is more stable. Maybe you are less stressed about splitting a dinner bill. Maybe you are contributing to retirement accounts. Maybe you have become the money person in your friend group. At this level, your confidence with money may begin helping the people around you. It can also reveal who is genuinely proud of your progress and who quietly becomes uncomfortable with it. So here is the question. If $100,000 is enough to change how banks, lenders, advisors, and even friends see you, what happens when your net worth reaches $1 million? Everything we just talked about can happen around the $100,000 level, and many people do not even realize those changes are taking place. But once your net worth reaches around $1 million, the shift becomes much more obvious. At that point, you are no longer simply getting small fee waivers or slightly friendlier service. You begin entering a different level of the financial system. At the $1 million level, banks may place you into private client programs. These are not the same as ordinary checking accounts or basic savings relationships. Many major banks have programs designed for clients with significant assets, and they usually come with more personal attention. For example, at JP Morgan, clients may get a dedicated relationship manager, wealth strategies, and invitations to exclusive events and experiences. This is where banking starts to move away from everyday transactions and becomes more service-focused. It is less about simply depositing money or paying bills, and more about building a long-term relationship with someone the bank sees as valuable. They want to keep you with them as your career grows, your assets increase, and your financial life becomes more complex. Some people may describe these private client benefits as nice to have, but not absolutely necessary. One person described receiving a different JP Morgan debit card with a phone number on the back that connects to Chase Private Client, access to a nicer branch in downtown San Francisco, and a dedicated relationship banker who was very nice, but not always needed. Still, the message is clear. At $1 million in assets, the bank sees you as someone worth retaining. You may also begin getting access to preferred lending rates, lines of credit, and more networking opportunities. The bank is no longer just holding your money. It is trying to become part of your financial life in a deeper way. Car dealerships can also feel different at this level. At $100,000, you may have been treated better because you had strong credit and more leverage. But at $1 million, you may have the ability to buy a car fully in cash, and you may also be considering luxury brands like BMW, Porsche, Mercedes, or Audi. And luxury dealerships often create a different experience. If your car needs service for more than a business day, you may receive a loaner car. The waiting area may feel more comfortable. The salespeople may be less pushy and less aggressive. Of course, buying a car can still take hours, but the difference is that you have more choices. You may not need financing at all. You may have more leverage in the conversation. And because of that, the people across the table tend to treat you with a different level of respect. When it comes to financial advisors, the $1 million level is where things become much more interesting. At $100,000, you might finally become someone who can receive more personalized advice. But at $1 million, the dynamic can begin to reverse. Instead of you going out to find an advisor, advisors may start looking for you. They may reach out through LinkedIn. They may contact you by phone or email. They may offer free consultations or portfolio reviews just to start a conversation. You might even get invited to a dinner, a client appreciation event, or a round of golf. The reason is simple. At this level, your assets are large enough to become meaningful to their business. Earlier, at the $100,000 level, hiring a financial advisor might not make much sense because the fee can feel too expensive compared with the size of your portfolio. But at $1 million, the math can begin to change. If an advisor charges 1%, that is about $10,000 per year. That is not a small amount of money. But if the advisor provides real comprehensive planning, the value may go beyond simply choosing investments. A good advisor at this level may help with tax strategy, estate planning, retirement planning, and coordination with your CPA or attorney. In the best case, they may help you save more than their fee each year. Another option is a flat fee financial advisor, where you pay a set amount for the year instead of a percentage of your assets. As your portfolio grows larger, that type of fee structure may become more attractive because it takes a smaller share of your wealth. But money does not only change how institutions see you, it can also change how people close to you behave. At the $1 million mark, friends and family may begin making assumptions about what you can afford. Someone might ask you to invest in a business idea. A family member might expect you to cover a bill, pay for dinner, or help with something you were never expected to pay for before. And even when no one says it directly, some people may start acting differently because they no longer relate to your financial situation the same way. When you no longer have to worry about the price of food on a menu, or when a $1,000 emergency expense no longer scares you the way it used to, a gap can begin to form in certain relationships. Not everyone will react badly. Some people will be genuinely happy for you. Some will still be comfortable talking about money with you. Some may even relate to you more because they are also doing well. But the $1 million level can reveal something important. It shows you who is proud of your success, who is uncomfortable with it, and who starts seeing your money before they see you. So if $100,000 gives you credibility and $1 million opens more financial doors, what happens when you reach the level where opportunities no longer need to be chased because they start coming directly to you? The first two levels are powerful, but they are still levels that many disciplined people can realistically reach through saving, investing, and staying consistent over time. But around $5 million, the entire dynamic of money begins to flip. At this level, you are not just getting better customer service. You are not just receiving credit card offers or financial advisor calls. You start reaching a point where opportunities begin coming to you before you ever go searching for them. Some of those opportunities may even be legally unavailable to people below a certain financial threshold. In banking, this is where you may move into the world of private banking or private wealth. Institutions like JP Morgan or Goldman Sachs have divisions designed for people with millions of dollars in assets. And at this point, it almost stops feeling like normal banking. The service can expand into full lifestyle support. You may have access to concierge-style services. They may help you find a CFO to manage your personal financial life, including bookkeeping, payroll, or other administrative needs. They may help with luxury travel, private jet arrangements, art, collectibles, or even vaulting. The bank is no longer simply offering you an account. It is trying to serve the entire structure around your wealth. This is why tiered systems are so important. At around $150,000, there may be Chase Private Client. Around $1 million, there may be JP Morgan Private Client. Around $5 to $10 million, there may be JP Morgan Private Banking. The names sound similar, but the difference between those levels is enormous. The higher you go, the more the relationship changes. You do not go looking for the bank anymore. The bank starts looking for you. The same thing happens with financial advice. At $5 to $10 million in assets, the conversation is no longer just about buying an ETF and holding it forever. The planning becomes more complex. It may involve multi-generational wealth, trusts, tax strategy, and structures that can preserve money for your children and grandchildren. You may also become what is known as a qualified purchaser. That can open the door to private equity deals, hedge funds, venture capital investments, and possibly even pre-IPO opportunities that most people never get access to. In the eyes of regulators, you may be seen as someone financially capable of participating in higher risk investments. Real estate can change too. You may start hearing about off-market deals before they ever appear on Zillow, Redfin, or the MLS. You may know agents, brokers, or developers who bring opportunities directly to you. You may be asked to invest in commercial properties or deals that are never shown to the public. And beyond finance, daily life can become easier in small but noticeable ways. Restaurant reservations, doctor appointments, event tickets, and introductions can all become more accessible. Each little advantage may seem small on its own, but together they create a completely different experience of the world. But the most complicated part may be how people around you begin to treat you. At $5 million or more, people may come to you not only for money advice, but for capital, access, and connections. Someone may pitch you a startup idea and ask you to write a check for $10,000, $25,000, or even $50,000. Someone may ask you for an introduction to a person in your business network. You may get invited to private investor dinners or charity boards simply because people know you have money. That can be exciting, but it can also become strange to navigate. Your network may change even if you never intended to change it. As your net worth grows, you may naturally begin associating with different types of people in different circles. And the hard part is figuring out who is in your life because they genuinely care about you, and who is there because of what your money can do for them. Money can open doors. It can create opportunities. It can make the world respond to you differently, but it can also make you more guarded. Because money does not define your character, yet it can attract people who care more about your wealth than who you are. So those are the three net worth levels where people may begin treating you differently. Around $100,000, you start gaining financial credibility. Around $1 million, more doors begin opening. And around $5 million or more, opportunities may start finding you before you ever look for them. The real lesson is not just that money changes your options. It also changes how the world sees you. And when that happens, the most important thing is to stay grounded enough to know the difference between respect, opportunity, and people who are only attracted to the number beside your name.